What's going on, everybody? Jeff here. Welcome back to the channel. Change in direction about an hour after the open by a major sell-off that just led to bleeding all day long. In this video, I'm going to give you a short and a long-term outlook after what was said today and why I believe investors are overreacting just a little bit. I'll explain everything. And then I'm also going to talk about how this correlates with AMC. AMC did bottom out at the same time the SPY did. I want to give everybody just a little comparison on what I see happening on the upside and on the downside. I'll break everything down for you. Let's get right into it. First off, as you can see today, looked like it broke over that pre-market resistance for a very short period of time, led by a massive knife candle and then just a slow, steady sell-off all day long. As you can see, all indices red. NASDAQ just really took a big, hard brunt of it, as well as our small caps, IWM and the Russell 2000, which, as we know, AMC is weighted heavily in there. Let's talk about what happened today. So Fed Governor Brainerd was speaking in front of the Senate Banking Committee today, and she had stated that the central bank could start reducing its balance sheet as soon as May and would be doing so at a rapid pace. All right, everything else she indicated when it comes to interest rate hikes, all right, and outlook of inflation and so forth was really in line, okay, with what they've been talking about over the past, let's say, month or so. However, when it comes to the balance sheet, that wasn't supposed to be discussed until about June, and it was going to be a little bit of a quicker of a pace, but still over a 6-month time frame, 6 to 9 month time frame. Now it looks like she startled investors a little bit, saying it would do so at a rapid pace. Okay. The other, I think, shock that it gave investors is that she normally favors a loose policy and low rates. So for her to say that really kind of, I guess, spooked investors just a little bit. However, in addition, the market expects the Fed to lay out a plan at its May meeting for running down some of the nearly $9 trillion in assets. Here is where I think investors overreacted a little bit. Now, we have had a massive run over the last 2 weeks, followed by a little bit of a cool off, bouncing off that 420 level. So seeing a little bit of pullback is actually healthy, and it is understandable, especially as volume has died down a little bit. But take a look at this comment I have highlighted here. It says the US economy is expected to take a major hit from the extra Fed tightening by late next year and early 2024. So a lot of times, okay, as we are seeing right now, all right, the effects of the COVID shutdowns in March of 2020, we are only really starting to see some of those effects. And we haven't even really, seen all of them as of just yet. Well, it's the same thing. The markets might adjust really quickly, okay, and anticipate some of this, but the economy isn't going to take a hit from the tightening until another 2 years from now. So that's where I believe that investors are overreacting a little bit. You also do have the yields at a lower time frame. Inflation is very high. All right, even Charles Payne had spoke just the other day stating that big funds and these large institutions still have a lot of cash on the sidelines. All right, and while retail has been the one buying some of the dip and fueling some of these run-ups, as low volume shows proof of that, eventually it's going to come a time frame where the big money is going to roll back in, potentially taking this market even higher. Now, if we zoom out just a little bit, you can see this massive run from about 420 all the way up to 460. That is just under a 10% run. In a 2-week time frame, we're still sitting at 451 as of close, a little bit over after hours as I'm making this video right now. But a little bit of consolidation here. If we break below that, obviously we know the levels back all the way down to the 441 would be the first major support, barring all 3 of these moving day averages. Okay, I will zoom in just a little bit closer for you just to see that this is a little bit of beginning to be a bearish setup from that March 15th bounce that we got. Remember that date, March 15th. It's been a nice steady uphill uptrend, I should say, all the way up to that 462 level. We did make a lower low and have made a lower high, break below that 450. As you can see, this time frame, this hourly time frame, shows you a little bit different of a picture. All right, so keep that in mind going forward. We're still playing intraday. The options on the indices have offered a little bit less of returns, and that's because their intraday moves have not been as vast as single stocks. When you look at NVIDIA, had a 5% move, 14 points. Okay, it's a bigger intraday move, and where our options are getting much more percentage gains on some of the values that and premiums that we are taking. let's talk about AMC. Okay, it has had a little bit of a rough go around ever since we did bounce off that $34 level and have consistently been downtrending. The reason why I talk about this is the overall market is, as you can see, this low of 12.9 was the same time the SPY and the entire market had bounced. Okay, because there are a lot of other funds that are involved with AMC, and you can go over to Fintel and you can see all of them, and especially being very heavily weighted in IWM, the Russell 2000. All right, a lot of this will be carried by natural, buying pressure of the entire market. All right, it did see a little bit of a bounce here. It's probably was led up by a gamma. We had a nice gamma ramp up, and it couldn't really ignite that last leg over that $40 to make all the strikes completely in the money. We have now broken a little bit below some support levels, sitting at that 2250 area. 20 has acted very strong going forward. But just remember that if the market tends to pull back and there's not buying pressure on individual stocks, it will take a little bit of a hit. Still, guys, we are almost still 80% above where we were in just a short time ago, probably about 3 weeks ago, as I could say, of where the March 20th is as of now. But keep that in mind going forward when if you want to be able to add to any of your positions. And like I said, it's always better to be prepared rather than be surprised. All right. So guys, that is it for this video. I'll see you in the next one.